Suprabhat, Namaskar, Sat Sri Akal, Game Show, etc. to all of you. I welcome you all in our income tax last session. And today we will be discussing the provisions of computation of total tax and optimization. In this topic, we have already covered in the last class the two new topic that was alternate minimum tax and structuring a salary package. And I've told you that generally this chapter covers the basic provisions, residential status, etc. So it is technically a summary of all the previous chapters. But the new topics we have already discussed in the last class. So I always believe that you are still working very hard to achieve the goal of your life to become a chartered accountant as soon as possible. So I have also asked you that please revise the basic concept provision and the salary provision and PGVP concept for today's session. Today we will cover numerical questions, so you will have an idea that how these kind of question needs to be solved in the examination. In today's class, we will see how to calculate total income under default tax regime as well as under optional tax regime and the calculation of tax also. And of course, there would be a AMT question also in which you have to find out the final tax liability, which should be most beneficial. So let's not waste the time. Start today's session. Mac, good morning. Before start the class, of course, the thought for the day for all of you. And as I told you that today is our last session, and you can see this thought for the day so justifying for this last session. Whatever thought for the day we have discussed earlier, whatever story we have discussed earlier, if I want to summarize everything in a single quotation, this would be the last quotation I would like to share with you. And what it says, if it is important to you, you will find a way. It happens. If something is important for you in your life, you will find a way to achieve that thing or to get that thing. If that is important to you, not your family, not your friends, not your relative, if that matters to you, you will find a way to get that thing. And if not, you will find an excuse. So if there is some goal in your life and if you want to achieve it, there is no one who can stop you. Whatever family issue, whatever life issue would be there, but you will find a way to get that thing. But if you are not interested, if you do not want to do that thing, even when your parents want that you should achieve that thing or your relative, your friends, it does not matter. The matter is you. And if you do not want to achieve something, you will definitely going to find an excuse that I can't do this because of this reason. So that's a so powerful and so important thought for the day for all of you. Let me tell you, C is very important. So please find a way anyhow to complete this course as soon as possible. Okay. So all the best for this. Let's start with today's session. In the last session yesterday, I have given you two questions, illustration number 1 and illustration number 2 as a homework. And I believe you must have tried illustration number 1 and illustration number 2 yourself. Now we are moving to discuss illustration number 2, that was for salary structure. And I've asked you that please try it once. And if you have tried it, you must have understand why this salary structure question or topic is so subjective. Because it considers a lot of things before giving an answer. Like in this illustration, you must have seen that the question was saying Mr. Kadam is entitled to a salary of 41,000 per month. He is given an option by his employer either to take house rent allowance or a rent-free accommodation, which is owned by the company. So Mr. Employee is having two options. Either he can take a house rent allowance or a rent-free accommodation. The HRA payable is the house rent allowance receipt was 7,000 per month, and the rent-free accommodation was 6,000 per month at New Delhi. Advise Mr. Kadam. Now, this is the requirement of question. This is very important. Before solving any question, we must know the requirement of question. And the question say, advise Mr. Kadam whether it would be beneficial for him to avail HRA or rent-free accommodation. And one more thing, give your advice on the basis of net take-home cash benefits. So, the option will have the higher cash inflow should be opt. Assume Mr. Kadam exercise the option to shift out of the default tax regime. So we have to solve this question under optional tax regime by taking HRA option and rent-free house option both. So when you will proceed to solve this question, computation of tax liability of Kadam under both the option, the basic salary will remain the same. Option 1 is for HRA, option 2 is for rent-free house. Now under option 1, there is no rent-free house involved. So for the rent-free house, it is not applicable. First of all, we will solve option 1. In option 1, we have house rent allowance. As the question say that your house rent allowance is 7,000 rupees per month. So for calculation of house rent allowance exemption, we need to consider three amounts. First one is HRA receipt. Second is rent paid minus 10% of salary. And third is 40% or 50% of salary. So the first point is HRA receipt, that is 84,000. Then 50% of basic salary because he is in Delhi. It is a metro city, so it would be 2,46,000. The third calculation is rent paid minus 10% of salary. And it will amount to 22,800. Out of these three, the lowest is 22,800, which is going to be reduced from the total amount received. Why? Because for the calculation of taxable amount, I have told you the universal formula is received minus exempt. So taxable value of HRA would be 61,200. The gross salary would be 5,53,200. Standard deduction would be 50,000. Why? Because we are under optional tax regime. Okay, let me open the PDF file. A second. Word file is not working properly, I see. Just a minute. Okay. We will solve through this PDF file. We were discussing illustration number 2. Okay, over here. So in this scenario, you can see gross salary is this one, tenure reduction is 50,000. So net salary would be 5,03,200. On this, the calculation of tax would be 13,140. Rebate would not be applicable because total income is exceeding 5 lakh. After applying the cess, my tax liability final would be 13,670. Now in option 1, if you will see the cash inflow in option 1, you can see the salary is 5,76,000. Out of which the rent paid would be my outflow and the tax what I am going to pay would be my outflow. So the net cash inflow would be 4,90,330. Understood? Now, if we'll move on to second option, the basic salary is 4,92,000. The perquisite value would be 10% of the accommodation. Salary value 10%, rent-free house taxable value is 10% because we are in metro cities, population having more than 40 lakh. This would be our taxable rent-free house value. After that, our gross salary would be 541,200. Standard deduction, net salary. So in this case, if my total income is less than 5 lakh, that means due to rebate, the tax liability would be nil. In this case, my inflow of salary would be 4,92,000 only. I am getting 4,92,000 salary because there is no allowance, etc. And the tax liability and other outflow would be nil in this case. So total inflow would be 4,92,000. And accordingly, because this option is having higher cash inflow, so we should opt rent-free house in this case. So by this kind of solution, you will understand what should be the correct salary structure. You can see, if you compare, you can see the basic inflow is higher under HRA case in comparison to option number 2, because you are getting basic salary as well as the house rent allowance. So if you take this gross inflow, you may think that this option is good, but it is not correct. After analyzing the whole question and applying the provision, this would be considered for the purpose of your answer. And accordingly, we have to go for option number 2. Understood? Now moving on to solve some more questions, which is your test your knowledge question. In this question, question number 6, etc. are very, very important. So we will solve this question one by one. First of all, we are having question number 1. It says compute the tax liability of Mr. Gupta, age 61 years. Let me tell you, students, please mark these information which is important in a question for the purpose of solution, because age will matter if he is under optional tax regime. But the question says you have to calculate tax under default tax regime. So still in this question, this age does not matter for the purpose of basic exemption limit, etc. But still, whenever these kind of information has been given in the question, please mark them. The total income is given 1 crore 1,50,000 rupees. As I have also told you earlier, then whenever your total income is slightly above the range where surcharge is applicable or your surcharge rate is changed, please always think in your mind about marginal relief concept. Because after 1 crore rupees, the surcharge rate changes. So that's why we have to calculate tax after considering the marginal relief concept in this case. The question also say, assume that his total income comprises of salary income, income from house property, and interest on fixed deposit. Can anyone tell me why this information is relevant, or what is the relevance of this information? That it says your income is considering only salary, house property, and interest income. What exactly examiner wants to communicate with you, or what this question wants to communicate with you without telling anything? They are explaining you something. What is the relevance of this information? Absolutely correct. Correct. Surcharge rate, and of course Arun Sagar is also correct. That is no income including in this 1 crore 1,50,000 of special category rate of income. So these are slab rate income, and of course, due to which the surcharge rate of a special rate you do not need to apply. So they are just explaining you that the income under section 112, 112A, 111A and dividend is not included. Now on the basis of this, we will solve this question as I've told you, for the purpose of marginal relief, there is a specific concept, a specific procedure you can follow. So this question number 1, for the purpose of calculation of tax, you have to make 2 columns. First is total income. And second is total tax. As we are calculating this tax under default tax regime. So the in question, step number 1 is, whatever income has been given in question, kindly write it down. This is 1 crore 1,50,000. And we have to calculate tax on this income as per slab rate. So in a default tax regime, first 4 lakh is non-taxable, next 4 lakh is 5%, then 10%, then 15, 20, 25, and 30. So accordingly, because I believe you must have revised those provisions, so we are not going to calculate that tax step by step. We know how to calculate this normal tax, and this tax would be 262,5,000. How much surcharge rate would be applicable in this case? What would be the surcharge rate in this case? The surcharge rate would be 15% of tax because income exceeding 1 crore. So surcharge would come to 393,750. Cess we will apply at the end after applying the marginal relief concept. At the end we apply the cess provision. So after adding this, my total tax would be 30,18,750. Now, what would be step number 2? Can you tell me what income I should write in step number 2, total income category? Zeros are out. So what amount of income I should write in step number 2 for the purpose of calculation of marginal relief? What should I consider in step number 2? Anyone? Arun is absolutely correct. Well done. 1 crore. Correct, Amar. So on 1 crore, correct, Vedant. On 1 crore, we have to calculate the tax as per the provision. So if you calculate tax on 1 crore, that would be 258,000. And what would be surcharge rate in this case? 10%. So that would be 258,000. So total tax in this situation is going to be 28,38,000. Clear? So after applying step number 2, now the time is to find out the marginal relief. So now we will have our step number 3. And step number 3 is for finding out the difference. So difference between income and tax, as per step number 1 and 2, we have to calculate it. So the income difference is 1,50,000 rupees. And the difference of tax, this difference is 180,750. Arun Sagar is saying marginal relief is 228,750. How it is possible? So your income has been increased by 1,50,000, but your tax has been increased by more than your income. You can see that. Your income increased by 150, but the increment in tax is 1,80,750 rupees. So how we calculate marginal relief? The difference of tax minus difference of income. Always remember, if the difference of tax exceed difference of income, then only marginal relief is applicable. And if it is applicable, How we calculate marginal leave? That means the difference of tax minus the difference of income. So the balance would be your marginal leave, 30,750. Marginal leave technically work as a discount. So this is a kind of discount you can claim from the tax you have calculated earlier. So this 30,750 you can claim as a discount from your tax liability of 3018750, reduce marginally 30750. So the tax liability would be 2988000. Now we will apply the 4% cess. The cess would be 119520. So after that, the final answer would be 3107520. I hope it's clear. So please follow the step one by one and you will get your correct answer. Clear, students? Moving on for next question. Question number 2, it says, Miss Charlie, an American national, got married to Mr. Radhe of India in USA. So as soon as in a residential status question, when you will find your assessee is not an Indian citizen, not a person of Indian origin, so it's a good news because now you know there is no special cases applicable. You only need to find out his residential status based upon 182 days condition in previous year and more than equal to 60 days and more than equal to 365 days in 4 preceding previous year. So the question is very easy to solve when you are not a citizen of India or not a person of Indian origin. So Miss Charlie, an American national, got married to Mr. Radhe of India in USA on 2nd March 2025 and came to India for the first time on 16th March 2025. So my previous year is 25-26. So that means I need to consider the number of days she stayed in India from this to this duration. During this duration, I have to find out how many days she was in India. So she came on 16th of March, that is before my previous year. So I will start counting from 1st of April. She left for USA on 19th September 25. As I always say, first of all, see the requirement of question. The information is given. She returned to India again on 27th March. While in India, she had purchased a showroom in Mumbai on 13th April, which let out at the rate of 25,000 per month from 1st of May. She also had taken the loan for the purchase of this showroom, and interest is this much up to 31st March 26. She also received gift from parent of husband, married sister of husband, and some friend. Now the requirement of question is this. Determine the residential status and compute the total income chargeable to tax along with the amount of tax liability on such income. So we have to find out the residential status first, then her total income and the tax liability on such income for the assessment year 26-27 if she opts out of the default tax regime under section 115 BAs. So on the basis of information, first come first. So first of all, we will find out the residential status. For the purpose of residential status, we have to find out how many days she was in India during this duration. As you can see, She came on 16th of March. So and went on 19th of September. So technically she was in India for April, May, June, July. April, May, June, July, August, until September 19. And she again came back on 27th of March. So 27, 28, 29, 30 and 31. So 5 days of March she was in India. So if you calculate the total number of days in India, that would be 177 days. And because she came in March on 16th, so if we need to know that in the preceding year, that means in preceding year 24-25, how many days she was in India, so that would be from 16th till 31st of March. So 16, 17, 18, 19, 20. So that means total 16 number of days she was in India. Before that, she was never in India. So now on the basis of this information, if you try to find out the residential status by applying these two conditions, I believe she is not going to satisfy any condition. As she is in India in previous year 177 days, this condition cannot be fulfilled. She is in India for 177 days, so the first part of the second condition has been fulfilled. But in the preceding, she is only 16 days, so this is also not fulfilled. So she will become a non-resident. Clear? Harshal, it's not more than 182 days. In aggregate, she is more than 182 days. But we do not need to consider those days when she was in India, but which does not fall under our previous year part. So she is 16 days, but that does not fall under our category of previous year. Now, on the basis of her residential status, we need to calculate the total income. Being a non-resident, only two incomes you can tax in India. Can you tell me what are those two income which could be taxed if you are a non-resident in India? Okay, somebody answered. Income earned and received in India, absolutely correct. Arun Sagar, Harshal, income received as well as Ariza earned in India, correct. So now the income information is over here and it says she let out a property. Lakshmi replied on query portal, income accrued or received in India, absolutely right. So now you can see she has let out a showroom in India and that is from 1st May 2025. So can you identify which income is head? This is going to be taxed. Rent from a showroom, that would be income from house property. From 1st May, that means for 11 months. So because there is no municipal tax, no standard rent, no fair rent has been given. So that would be directly become my GAV and that would come 2,75,000 rupees. Clear? Now, out of this, we can deduct municipal taxes, but there is no information has been given. So, no municipal tax, that would become my annual value. And out of this, we will deduct 30% standard deduction. That would be 82,500. Now, the loan information is also given directly in the question that she has taken a loan. The interest is 97,500 on this loan. So technically, my income would be 95,000 from income from house property. Mathli is saying I am not able to join through Zoom by VOS portal. I don't know what is the issue in that, Mathili. Correct. Sure. So income from house property is 95,000 rupees. Now moving on to other income. The information has been given. She has received following cash gift from relatives. From husband, if you receive cash gift, that is going to be non-taxable. That is exempted. Gift from relative, whether monetary, non-monetary, is exempted. From married sister of husband, in the definition of relative, the brother and sister of a spouse also include. So in this situation, this is also exempted. Now, from two very close friend of her husband, she received 1,51,000 and 21,000. So if the monetary payment exceed in aggregate 50,000 rupees, then the whole amount is going to be taxed as your income from other source. And friends does not count in the definition of relatives. So this 1,51,000 and 21,000 would be your income from other source. So this 95 and 151 and 21, the aggregate total income would be 2,67,000. So this would be your GTI. There is no deduction under default tax regime as given in the question. There is no deduction information. So this would become again my total income. Now, can you calculate the tax on this income? What would be the tax liability on 2,67,000 under default tax regime? Sorry, under optional tax regime. The question is for optional tax regime. So no investment deduction information has been given. So there is no reduction. You need to calculate the tax under optional tax regime on this income of 2,67,000. So tell me what would be the tax liability in this case. Okay. Amar Shinde is saying 884. Arun Sagar is saying 884. Harshal is saying 850 rupees. Anyone else? Kambrika Arjun Simha is saying correct, absolutely right. So the correct answer is given by now, and that would be 880 rupees, not 884, because you need to round off it into the multiple of 10 rupees. So if you'll calculate tax on this, that would come 850 rupees. Cess would be 34. Total tax is 884, but in the examination, you have to round it off. And the correct answer would be 880 rupees. Listen very carefully. Even if it is a MCQ and there is option 1, 884, option 2, 880, the correct answer would be 880. Do not tick on 884. Understood? Okay. We did not give the rebate benefit in this question. Why? Because under optional tax regime, up to 5 lakh rupees income is exempted due to rebate technically. But we did not give the rebate benefit in this question. What is the reason behind it? Yes, exactly. Because she is a non-resident. So you can see the residential status affect your tax liability. So under income tax, everything is interconnected. We are discussing chapter 2, residential status. We find out the status and she become non-resident. Now you can see the chapter 2 is actually affecting chapter 9 concept. In chapter 9, what we are doing? We are calculating the tax liability. And this chapter 2 impact is on your chapter 9 provision. So income tax, if you think it is complicated until you are not able to connect the provision. So this is the beauty of income tax, you can say, or this is the problem also under income tax, that things are interconnected. So when you solve a question of chapter number 9 or chapter number 7 or chapter number 8, it might be connected with chapter number 2 or 4 or 5. So these provisions should be applied consolidated. Okay. 884. Dhanlakshmi is saying 3350. Dhanlakshmi is saying, sir, how you got the 34? 34 is cess. 4% cess भी तो लगाना पड़ेगा धनलक्ष्मी. 4% cess on tax, always, हमेशा. So your cess would be 34 rupees. Got it? चलो आगे बढ़ते हैं. अरे अभी कैसे बढ़ेंगे, अभी तो बी पार्ट भी है. The B part says, would her residential status undergo any change? Assuming that she is a person of Indian origin and her total income from Indian sources 18 lakh and she is not liable to tax in US. Now what happened? The question changed into special condition. In case of a special condition, there is first is for person going outside India permanently for employment, etc. So this is not applicable. Second and third is for person who comes to visit India. So because she comes to visit India, but for that also the condition is only 182 days. So it is not satisfying. Third is for those comes to visit and having more than 15 lakh rupees income from Indian sources. So for that reason we can apply, and the condition is again more than equal to 120 days and more than equal to 365. So she is satisfying this 177, but again not satisfying this. So she is not able to satisfying any special condition. So now we have, when this line is there, she is not liable to tax in USA. That means we now check the deemed resident concept on her. So deemed resident can be applied only after she does not fall under section 6(1) provision. Now can you tell me, in this point number B, would she regarded as a deemed resident or not? Because in case of deemed resident, you should have income from Indian sources more than 15 lakh. You should not pay tax in USA. So will she become a deemed resident or not? Arun Sagar is saying no. Harshal is saying yes, she is a deemed resident. Vedant Tiwari is saying yes. Arun Sagar is saying no, third time. Harshal is saying yes. Amar is saying deemed resident. Mehak is saying no. Dhanlakshmi is saying no. And the correct answer is no. She cannot be a deemed resident. Why? Because for the purpose of deemed resident, citizenship required. If you are an individual and citizen of India, then only you can check the condition of deemed resident. Because the deemed resident first point says you should be a Indian citizen. If you are an individual and person of Indian origin, then deemed resident concept does not apply. So she cannot be a deemed resident as well. So she will remain non-resident. Her status will not change. She will still remain non-resident under point number B. Understood? So you can see the smartness of the question maker. He or she intentionally write it down this point. So you will get confused. Person of origin, and you said that they have written she is not liable to tax in India. So as soon as you read this line, the concept of deemed resident comes into your mind. And maybe you will feel, okay, that's why the question has been framed, because in this now she will become a resident. No, it is not mandatory. So every information is relevant. You have to go through every information. And the one thing is very important. Don't be in hurry. Don't be just rush to find out the final answer. Take your time. The process should not change whether the question is easy or difficult in front of you. The process is understand the question. Then process it with your provisions. Then only move on to the answer. Understood? Sure. Tanisha, RONAR, deemed resident. Yes. No, Tanisha, not deemed resident. I believe now you must have understand why she is not a deemed resident. Third question. Harshal, agar if in the question it has been written that she is a citizen of India, then in this question she will become deemed resident. Absolutely right. Chalo, question number 3. Dr. Niranjan, a resident individual aged 60 years, is running a clinic in Surat. Her income and expenditure account for the year ended March 31, 2026 is as under. So income and expenditure account has been given, and information regarding rent paid, clinic equipments, rent received bhi hai, that means house property income. She receiving salary also, so she's earning salary income also. Deduction, an amount of payment for medical. Now the requirement of question is to compute the total income under default tax regime and optional tax regime. Student, I believe you must have taken that class of that fortnight program on 7th of July. In that program, we have discussed, Aparna ma'am told that whenever you solve a question of computation of total income and tax liability, the head sequence you have to follow. The head sequence means, first of all, in the final solution, whatever you are presenting in before of your examiner, whatever answer you are showing in the final calculation, the first head should be salary income. The second should be income from house property. The third should be PGBP. The fourth would be capital gain. And fifth head would be income from other source. As you can see in this question, initially PGBP information has been given. So you cannot calculate first PGBP add income, then house property, then salary. You can solve that part in working notes. You can do one thing, start from PGBP, take the profit, allowed, disallowed, etc. Then you will find your net profit as per PGBP. But you need to make a final presentation after all calculation. You will find the net profit as per PGP, then you find out the salary income, then house property. So you can find out these things in your working notes. But whenever you are going to show the presentation, whenever you are going to write it down on the heading that computation of total income under default tax regime for Mr. So-and-so for assessment year 26-27. In that final presentation, you have to firstly write it down, income under the head salary. So whatever working note in detail you have done for the calculation of salary, you can show the final income under the head salary over here. Then you can add the income from house property. Or then third is PGBP and so on. So full PGP calculation you can do in working note, and then you can drive the net profit, whatever you have solved over here. That working note should be the part of your answer. That is not a rough work. That should be the fair work. Because examiner wants to know how you calculate this net profit. So there must be a place where you have shown this proper calculation. Understood? Please follow this thing. Even you can see how the studies solve these kind of questions. Look, this the question session number 2 is there. So how they solve? First of all, gross salary, then house property, etc. In the solution part of these question also, what we are solving under test your knowledge, you can refer that the solution is actually in this format. First of all, salary, house property, etc. So I am going to solve as per the format. So first of all, after reading the question, now we know that there is a salary information given. So first of all, I will consider the salary income. Salary is 7,500 rupees. So my salary income would be 90,000. No other information. So standard deduction we can claim under default tax regime we are solving 75,000. So net salary or taxable salary would be 15,000. Now income from house property. The income from house property says you received GAVs 27,000, municipal taxes only 2,000, and which has been included in administrative expenses. So 27,000 would be my GAV, less municipal taxes 2,000. Then we are having our annual value 25,000, 30% standard deduction. This is income from house property. Now the PGBP start. For the purpose of PGBP, we have to take the net profit which has been given in question. And now on the basis of information, we will add and subtract the amount or the information which has been given in the question. Sure. So now moving from always the income side, that would be easy to solve your PGBP question. So consultation and medical charge would form my business income, of course, so no need to do anything with it. Income tax refund 5450, out of which 5,000 is for principal and 450 is for interest. So we will reduce the full value, that would be 5450. And in that session, it is also mentioned that you cannot write it down just like that, reduce 5450. You have to mention in small or short why you are adding it back. So every amount you add back under PGBP or reduce, you have to mention the reason in short, very short, but you have to explain it. So examiner should understand whether you know the provision or it is just like that you are doing TikTok type of thing. So you need to write it down because this is not part of my business income. So you can write it down. So it's reduced 5450. So in short, you have to mention the reason behind it. We do not asking you to quote the section, etc. You can just explain it very short. Like dividend from units of UTI. So I am going to reduce it and I can write it down. Dividend is income from other source. That would be enough to make you understand your examiner that you know the concept. So that would be 10,500. Then we are having winning from game show net of TDS. So that means 35,000 has been included after reducing TDS of 15,000. So the gross income must have been 50,000. But after TDS, included in PGBP is only 35,000. So we will reduce it from my business income. Rent is income from house property. So income side has been sorted. Now we are going to check the expenses side. Medical consumed, of course, would form part of our business expenditure. Then staff salaries, correct, clinical, rent paid, administrative expenses. If you have remembered, the information says municipal taxes 2,000 is the part of administrative expenditure. So out of this, 2,55,000. 2,000 is going to be disallowed. Then amount paid to Scientific Research Association approved under section 35. So can you tell me the treatment of this? It is approved under section 35. Should I skip this information because it is allowed, or do I need to disallow this? Let's see what answer says. Arun is saying not allowed. Arshal is saying allowed. Mehak is saying allowed. So the correct answer, it is not allowed. The reason is we are solving this question under default tax regime. Under default tax regime, Lakshmi is also saying not allowed. Under default tax regime, you can only claim in-house scientific research expenditure deduction. But if there is any payment contribution to any other organization for scientific research, that is not allowed in case of default tax regime. So this needs to add back. So all the information of this P&L has been over. Now moving on to adjustments. Rent paid includes 30,000 paid by check towards rent for her residential house. So it is a personal expenditure. I do need to add it back. 30,000. Next is clinic equipment. On the basis of this clinic equipment, we will claim the depreciation, and that is going to be reduced from my profit. So on 5 lakh rupees was the opening WDV, on 7 December 25 acquired by check. This is less than 180 days. So on this, we will claim full 15% depreciation, and on this, we will claim half of the depreciation. So that is going to be 75,000, and this is going to be 15,000. Clear? Rent we have solved, salary we have solved. Now Dr. Niranjana availed a loan of 550 from a bank for higher education. So this is for deduction under section 80E, which is for deduction purpose. So this PGBP concept, I believe, has been over. There is no information connected to PGBP yet. Correct. So if you calculate, your PGBP would be 454,450. This would be my PGBP income. Now income from other source, because there is no capital gain information. Under income from other source, we will consider the interest on income tax refund 450, then dividend income 10,500, and remember the winning income would be included 50,000. It was given in question 35,000, but you can see winning from game show TDS already been deducted 15,000. We need to include all income on gross basis. Gross basis means before TDS. So you have already completed the TDS provision. In that provision, the faculty must have told you that if there is any amount you receive on which TDS requirement is there, and if that amount has been written net of TDS, that means TDS has already been deducted. So you have to consider the income after adding back that TDS. That means on gross basis. That means before deduction of TDS. So 35,000 after 15,000. So total income would be 50,000. That is income from other source 60950. After adding all the income, your gross total income would be 547,900. And because these deductions 80E, 80C, 80D is not allowed under default tax regime, so this will become your total income as well. Now, on the basis of this, when we will calculate our total income under optional tax regime, first of all, we will take the total income as per default tax regime, 547,900. And now we'll make some adjustment. In this 547,900, the income from salary head, house property, PGBP, other source, etc. has been included. So do we need to do any adjustment on the basis of salary income? So one by one you need to check whether do we need to do some adjustment on the basis of salary income in this income or not. What do you think, student? Just a second. Okay, by mistake, video off ho gaya. So do we need to do any adjustment in this? Arshal is saying yes, 50K, because in case of just a second. So because in case of optional tax regime, we will have the standard deduction of 50,000, and we have claimed in this the standard deduction of 75. So we need to add back 25,000 for that standard deduction. In case of house property, there is no difference, so we are not going to do anything. In case of PGBP, the 1,50,000 what we have disallowed against scientific research, that we need to give the benefit under optional tax regime. So the scientific research expenditure deduction you can claim under optional tax regime. Then the deductions in respect of point number 5, 6, and 7 we have to go through. 550 is taken for education of her daughter, and the principal amount is 1 lakh and interest 55,000. Can you tell me what we can claim? Interest, principal, or both in case of higher education loan under section 80E? Arun Sagar saying, so can we claim depreciation on 35AD business due to default tax regime? 35AD not allowed? Yes. If you are solving a question under default tax regime, and if there is any business asset which belongs to section 35AD deduction, so we cannot claim section 35AD. That means 100% deduction is not allowed, but we can claim the depreciation on it under our default tax regime question. Absolutely right, Harshal, Vedant, Kambri, Karanjan, Simha. The deduction can be claimed only for the interest portion. So the interest is 55,000, we can claim it. Then she paid 1 lakh as tuition fee, which is under section 80C provision, not in the nature of development, donation, etc. for a full-time education. So 80C you can claim 1 lakh rupees. And the information and amount of 28,000 has also been paid by check on 27th March for her medical insurance premium. So that could be claimed under section 80D. So she has paid 28,000. How much we can claim under section 80D? What is the maximum limit in this case? Exactly, because she is a senior citizen. And in that case, in normal case, it was 25,000, but in case of senior citizen, you can claim up to 50,000 rupees. And that has been written 60 years is running. So if 60 years is running, still she can take the benefit of being a senior citizen. So full 28,000 reduction she can claim, and that would be my total income in this scenario 239900. That would be total income. Because the question does not ask you to calculate the tax liability. So we are not going to calculate the tax liability in this question. In the examination also, if the question asks you to calculate GTI, just stop at GTI. Do not try to solve a TI also. If the question asks you to calculate total income, just calculate total income. Don't go for calculation of tax. Understood? Chalo. Question number 4. Mrs. Purvi, age 55 year, is a chartered accountant. Congratulations. In practice, she maintains her account on cash basis. Her income and expenditure account for the year ended March 31, 26 are as follows. Okay. So age matter, 55 year, no senior citizen benefit. Okay. Next is allowable rate of depreciation has been given, value of benefit received, incentive to article assistant, repair and maintenance, salary, what she paid. Is this traveling again for business, medical insurance premium? She invests an amount of 10,000 in national savings certificate. So there is no information regarding house property, but we need to check the P&L. There is audit fee, consultancy, dividend, income from UTI, honorarium, rent received from residential flat let out. Yes, house property income. So first of all, we have to solve the house property, or we can solve it in working note. In the final presentation, you have to show the house property before the PGBP income. That's it. Do not bother about it. The requirement is to calculate the total income and tax liability in a most beneficial manner. So when we say most beneficial manner, that means we have to solve it under default tax regime as well as under normal income tax provision. Under normal income tax provision, there would be under optional tax regime and as well as AMT if applicable. So the provision of AMT, what we have discussed yesterday, that might be applied. We will see in this question, is it applicable or not? First of all, we are going to solve it as per optional default tax regime. The business income has been given 928,224. House property we will solve after that, but in the final presentation, you have to show it before the PGBP calculation. So the net profit is 928,224. Starting from the credit side, this dividend is going to be reduced. This income from UTI, income from other source. This is also income from other source, royalty kind of income. And rent received is 85,600. These are the income which should not be the part of my business income. Moving on to the expenditure, office rent, printing, stationery, etc. allowed. Meetings, seminar, conferences, purchase of car for official use. So asset cost cannot be the part of your expenditure. You can claim the depreciation, but asset cannot be the part of your expenditure. So this is going to be add back. Generally, in case of car, it happens that car is used for personal purpose also, etc. So if you go through about the car, you can do that adjustment exactly on the point we have solved the car provision. There is no information like that. So on this car value, you can directly claim the depreciation. That would be 12,000. So add the cost of the car, claim the depreciation. Repair maintenance of car is allowed. Municipal taxes paid in respect of house property. So that can't be the part of my business expenditure. And that comes to 3,000. Now read the information. Allowable rate of depreciation is 15%. We know that. Value of benefit. Received from clients during the course of probation is 10,500. So if you receive any benefit from client, that would become the part of your business income. So that is going to be included 10,500. Next is incentive to article assistant represent the amount paid allowed. Repair and maintenance of car include 2,000 for the period from 1st October 25 to 30th September 26. So what is the treatment of this information? Starting is by this provision that she's a chartered accountant, maintain account on cash basis. Now what would be the treatment of this point number 4? Arun is saying allowed because cash basis. Absolutely correct. Because she is not maintaining account on mercantile basis. She is maintaining account on cash basis. So whatever payment she will make in this previous year will be treated as this year expenditure. So even if it is relevant, some part of an expenditure relevant to the next year, but still because the accounts are maintained on cash basis, so we do not need to do anything with this. We have claimed that as an expenditure, it will allowed as an expenditure. Salary includes 30,000 to a computer specialist in cash for assisting Purvi in one professional assignment. Exceeding 10,000 payment of cash would be disallowed. So in this case, this full 30,000 is going to be disallowed. Next is traveling expense include expenditure allowed by RBI. So not an issue. Medical insurance premium on health of dependent, that would be a deduction part. NSC also a deduction part. So PGBP has been completed. The income from PGBP would be 920,200. Now income from house property, you can see the rent is 85,600. Municipal taxes 3,000 paid. So it would be 82,600, out of which 30% deduction you will claim. That would be 24780. So the remaining would be 57820 income from house property. Now income from other source 10524, 7,600, 15,800. That would be 33,924. The aggregate of these three heads of income would be the GTI 1011944. This would be your GTI. And of course, no reduction would be there. So that would be your TI as well. No special rate of income has been included. So if you calculate tax on this, up to 12 lakh, whatever tax would be there, allowed as a rebate. So because income is less than that amount, you have to show the tax. You need to calculate tax on it. You cannot write it down, tax is nil directly. In the examination, you have to calculate tax on 101194, whatever. And you need to, of course, make it round it out, 1011,940. Calculate tax on this. On this tax amount, the rebate need to be reduced. The amount of tax up to 60,000, it would be less than 60,000, whatever the amount, less rebate. Then you can show the tax is nil. Understood? Now on the basis of this GTI, we will calculate TI under optional tax regime. So first of all, need to take the TI under 1011944. Now we will do the adjustment. The adjustment only belongs for the purpose of deduction. Medical insurance premium on the health of dependent brother and major son dependent on her amounts to 5,000 and 10,000 respectively, paid in cash. So dependent brother does not include in the definition, so this cannot be allowed. For son, you can claim the benefit, but because it has been paid in cash, so again, this is also not allowed. So no deduction from this point number 7. Now she invested amount of 10,000 in National Savings Certificate. Can you tell me under which section you can claim this deduction? Yes, 80C. So 80C deduction we can claim for 10,000 rupees. So the income would be 1001944, rounded up to 1001940. In this, tax would be there under optional tax regime 113082. 4% cess you apply, and after adding the 4% cess, tax would be 117605. Rounded off 117610. So this is not beneficial to the assessee. The assessee is having benefit by claiming or by calculating her tax under default tax regime. In this question, we did not apply the AMT provision. You can see why. Because AMT provision can be applicable only if in the question section 35 AD deduction, section 10 AA deduction, and that specified section QQB, RRB, etc. deductions are there. If these deductions are not there, we cannot apply the provision of AMT. Understood? Sure. Any query in this respect, student? Kambi Karan is saying an adjusted total income, adjusted GTI, no GTI, adjusted TI exceed 20 lakh. So adjusted TI you will calculate when this section 35 AD 10 AA 80 RRB is there. If these are not there, you do not need to even calculate the adjusted TI. If these deductions are there, then you will calculate, and then if it is exceed 20 lakh, then you have to find out the AMT tax. Sure. Any other confusion, students? Moving on to question number 5. So question 4 we have solved, then question number 5 is there. Harshal is saying rebate. You have to calculate tax on one. Why you are asking for rebate in this case? In case of optional tax regime, Harshal, rebate is only when your total income is up to 5 lakh rupees. And in optional tax regime, the income is 10 lakh 1940. So rebate is not applicable. So next is question number 5. Mr. Y carries on his own business. An analysis of his trading and profit and loss account for the year ended on this much revealed the following information. Net profit was 11,20,000. The following income were credited in the profit and loss account. Income from UTI, income from other source, of course it will go. First of all, read the question: interest, winning, opening, closing stock information, contribution for scientific research, salary payment, advertisement, total expenditure, miscellaneous. The car was used both for personal and official 3/4 is for business. So generally in case of car, this kind of information may be given in the question that some part of car is for personal purpose. So for 3/4, we will only consider the expenditure. 1/4 is going to be disallowed. Then miscellaneous expenditure, depreciation, borrowing, investment. So you can see there is no other income. Like salary, house property is not there. And the requirement of the question is to calculate the total income under optional tax regime as per normal provision of the Act. So we just need to calculate the TI under optional tax regime. So let's go for it. Profit has been given 11,20,000. And these are the incomes 22,000 from UTI, etc. So I am taking net profit over here. 11,20,000. Income from UTI needs to get reduced 22,000. Interest on debenture, now you can see 17,500. Winning from raise, gross. Now you are seeing the gross word has been utilized. That means TDS has not been deducted on these amount till now. Now it was found that some stock were omitted to be included in both the opening and closing stock, the value of which were. So we have forgot to include opening stock of 8,000 and closing stock of 12,000. So can you tell me the treatment of these separately to adjust in this? What this 8,000 will do? It is going to reduce my profit or going to add it? Should I reduce it or add in my this 11,20,000 calculation? The same is for closing stock. This 12,000 need to be reduced or added back. What are the treatment of this 8,000 and 12,000? Tell me separately, not in aggregate. Vedant is saying 8,000 add, 4,000 need to reduced. Vedant is saying 12,000 opening need add and closing need less. Think one more time, students. Not that difficult. Understand what the question says. These are omitted. Opening stock and this closing stock, we forgot to include in the profit. You need to do the treatment now. If I'll write it down, suppose no, this is my profit and loss account. If I'll increase my opening stock by 8,000, what would be the impact on profit? Expenses side increase, so profit will reduce by this opening stock. And if I add 12,000 in closing stock, the profit would of course increase. So this would be the treatment of stock. Clear? No, not both added. You're not getting this. This is my trading account. If I increase my opening stock, profit will reduce. This is my expenditure side. If salary increase, if opening stock increase, if purchase increase, what happened? Profit decrease. So treatment would be decrement of this profit. If I add anything in the credit side, that increase my profit. That's why this closing stock has increased my profit. Okay. Sure. 1 lakh was debited in the profit and loss account, being contribution to a university approved and notified. So because we are under optional tax regime, this contribution is allowed. We do not need to do anything with it. Salary include 20,000 paid to his brother, which is unreasonable to the extent of 2,500. So we will add it back. Advertisement expense include 15 gifts of dry fruits costing so and so presented to customer. So it would be a sales promotion expenditure, would be allowed as an expenditure. Now the car expenditure was 78 3/4 is for business. So 1/4 is going to be disallowed in respect of car. That will amount 19,500. Miscellaneous expenses include 30,000 paid to so and so transport operator in cash. So in case of transport operator, the limit is not 10,000. The limit of disallowance is exceeding 35,000. Because this is under 35,000, so no treatment of point number 8 as well. Depreciation as per books is 55 and as per income tax is 50. So whatever depreciation as per books of account need to be added back, and the as per income tax needs to be reduced. Drawings 10,000 disallowed because it's a personal expenditure. Investment in NSC, again it's personal, need to be disallowed. So after all this, your PGBP income would be 1121,500. Now we will consider income from other source. There was 22,000. In aggregate, it would be 1176,000. 80C deduction for this investment, 15,000 you can claim. So the total income would be 1161,000. That would be our answer. Any confusion in this? Question number 6 is very important. Till now, we are seeing that either we are calculating total income and even we are calculating tax, but tax is as per normal slab rate. There is no tax calculation for a special rate of income. How we get the benefit of basic exemption limit in case of a special case of income, how we charge the rate of interest, etc. So to understand those provisions, question number 6 is very, very important. Kindly mark it important as I have done. Okay, then Lakshmi clear हो गया. Reduce opening, closing, add. ये opening closing वाला जो treatment है ना stock का, it generally makes student confused in the examination. So for that reason, I have just shown you. Please do this. Make a P&L and then see what it says. Opening and closing. Suppose the question says we need to reduce our closing stock by 10,000. So if closing stock is reduced, it goes down. That means my profit also goes down. If opening stock goes down, my profit goes up. So it is very simple. If you imagine or if you prepared or if on the basis of the P&L format you want to understand what is the treatment, that would be easy in the examination. Chalo, question is Bal Murugan Kambi Karanjaram Simha is saying, sir, do we add back 5,000 only after separate considering adjusting 55 minus 50 instead? No, you should show the calculation separately always. Suppose if you have written down only 5,000, how examiner will understand what it is? It's better to show always both separately, add back as per accounting provision depreciation and reduce as per income tax depreciation. That will also help in step marking. Suppose you wrongly add back in place of 55,000, you wrongly write it down 65,000 in examination, wrongly by mistake, and you reduce correctly 50,000. So if you've shown these two things separately, so only the marking for that 65,000 mistake will gone. You will get the marks for your 50,000 correct treatment. But if you combined it and write it down 15,000 in aggregate, 65 minus 50. So it will take both the marks from you. So please remember, show the provisions and solutions separately, as in same in case of opening and closing stock. Don't go for consolidated additions. Show the opening stock treatment separate and closing stock separate. It will enhance the probability of step marking in your case. So, question number 6. Paul Morgan furnished the following information for the year ended on 31st of March 2026. Income from textile business. This is a set of loss question also. Income from textile business, so it is a loss. That means loss. Income from house property, again loss. Lottery winning, profit. Speculation business income, profit. Salary computed. When any income is say computed, that means all deduction etc. has been done. This is a net income from that head of income. Long-term capital gain profit. Compute is tax liability and advance tax obligation under default tax regime under section 115 BAC. Very, very interesting question. I'll show you how to set off losses also in this. There's a format. If you'll follow that format, the setting of loss concept would be very, very easy for all of you. And then how to calculate tax on it. So that I'm going to show you on a separate sheet. For that, I have to write down the information. Let me write it down information on our whiteboard. Okay. So the question says we have income from textile business. And that is a loss of 1,35,000. So I am just writing down the question. Income from house property has been given in question. That is also a loss of 15,000. Lottery winning. Income of 5 lakh. Speculation business. Profit of 1 lakh. Income by way of salary. 3,70,000. Long-term capital gain 112,70,000. The question says you have to calculate the tax liability as well as the advance tax liability, if any, under default tax regime. Clear? Now, if there is any question in which set of concept is applicable, I will tell you how to solve those questions. In my opinion, solving a set of question is little tricky. Because if you try to solve that question in table form, I believe if you are solving that question in vertical, that house property need to set off from business, etc., that will be really confusing at times. I always suggest to solve it horizontally by making a diagram. So for set of concept, always follow this diagram and you will be able to solve this question easily. Look what I'm doing. I'm doing nothing. I'm just writing down the information which has been given in the question. This is my question. And this is going to be my solution of set of. And you will feel how easy it would be. So for set of solution, first of all, we have 5 heads of income. PGBP. Capital gain. Income from house property. Salary. Income from other source. Now, write it down, whatever information has been given in the question. Now, income from textile business, this would be the part of my PGBP, but it's a normal business case because under PGBP, we have 3 kind of business. PGBP, speculative business of PGBP, section 35 AD specified business and other business. So textile will fall in other category. And that is 1,35,000. Always use plus minus sign. So you will not do mistake. Income from house property. So this is minus 15,000. Lottery income. Where should I show this lottery income? Lottery income is the part of which head of income? Other source, absolutely correct. So we will take this as to other source. Other source may have other income also, lottery, interest, etc. So lottery or casual income is having separate treatment. So I need to show it in a separate part. That is 5 lakh. Then speculative business. So this is again my business, but it's a special business because these losses cannot be set up from normal business. That's why I'm making it separate diagram. So that would be 1 lakh. Clear? Now income from salary computed plus 3,70,000. And then long-term capital gain. Again, capital gain also having two parts, long-term, short-term. In this example, it's only long-term capital gain. 112 has been given 70,000. This you need to do in your examination. But this is not a complete format because the information belongs to only this relevant information regarding this question. That's why we have prepared it. If you want, I can show you the full format for the purpose of examination. This is the full format. You can take the screenshot also. For the purpose of set off, always follow this format. Just write it down, your information of question in this format, and you will be able to solve that question so easily without any problem. Always do this thing. This is the complete format I am showing. PGBP. PGBP can have three types of losses on the basis of set of provision. Either it would be a speculative business loss. So that speculative plus minus, you need to write it down over here. That could be 35 AD, is specified business. But remember, this would be only in case of optional tax regime. In case of default tax regime, this 35 AD part would not be there. And the next would be all other business, whether it's textile business, whether it's trading, manufacturing of any other kind of business. So only other kind of business losses would be over here. 35 AD losses profit would be there. Speculative business profit loss would be there. 30 AD would not be applicable in case of optional tax or default tax regime. Then write it down the capital gain. In capital gain, always mark two kind of capital gain, long-term capital gain and short-term capital gain or loss, whatever it is. So there, if the short-term loss or gain is there, write it down over here. If long-term, write it down over here. And then you should remember the provision that short-term loss can be set off from long-term, but long-term loss cannot be set off. Both you have to remember. But the format will help you to understand which loss I can set off via which income. If you try to solve these kind of question in a table form, one against again, one against, it would be really difficult to set off correctly. It will consume your time also. Then income from house property. So whatever loss or income from house property, you can write it down over here. Remember, under income from house property, losses cannot be set off under interhead. So that we will discuss later. That's a provision. Under default tax regime, house property losses cannot be used for interhead adjustment. Then salary. There would not be ever loss, only profit. And then we have income from other source. There are three separate kind of income you need to mention. Casual income. There could not be ever loss. This is locked. लॉक मतलब इसमें से कोई लॉस सेट ऑफ ही नहीं कर सकता. If there is any casual income, no category is allowed to set off loss from casual income. There could be only profit or zero. Then owning and maintaining race horses. And then other income like dividend, interest, etc. that would form part of overhead. So this is the complete format. Whatever question you are facing regarding set off of losses, write it down, the income and losses accordingly, the chart is here. Then start applying, first of all, intra-head set off. So you will know from which income I can set off. Then you need to apply after intra-head, inter-head set off. Try to solve your question from set of chapter, illustration, test your knowledge with the help of this diagram. And you will feel how easy it would be to understand, to solve these kind of questions. Okay. Chalo, that was for your help. I have done it. Like in this example, I am practically showing you, if I'll go for now intra-head adjustment, first of all, can other loss be set off against speculative business or not? What is the answer? Can textile business loss be set off against speculative business or not? The answer is yes, not no. The answer is yes. Why? Speculative losses cannot be set off from normal business, but other is allowed to set it off from normal business. So after setting off, what would be the result? 35,000 loss under other business is still. Long term does not have any other income loss, so it will remain 70,000 even after intra-head because it does not have any loss over there. Under income from house property, there is no profit, so it will remain 15,000 loss. Salary will remain 3,70,000. And casual income will remain 5 lakh. After intra-head adjustment, the position is in front of you. Now we will move to inter-head. Can we set off our other business loss from capital gain or salary or other source casual income? So casual income is locked. Business losses cannot be set off from salary income. Can business loss be set off from capital gain or not? The correct answer is yes. Capital gain loss cannot be set off from business head. But business head is allowed to set off its loss from capital gain. There is no restriction in this. So after setting off this 35,000, now business income is nil. After interhead, my long-term capital gain is now remaining 35,000. This is not allowed to set off under default tax regime. Under default tax regime, you cannot set off your house property losses from any other head. So this cannot be set off. Salary would remain 3,70,000 and 5 lakh will remain your income. As soon as you will add all these will become your GTI 905,000. If you will try to solve even this small question of set off in vertical order, it would be difficult to understand from which income we should set it off. But when you will make this diagram, you will automatically know. We did not do anything. We just write it down the question in this format. And then we apply the intra-head. It just plus and minus. It just addition, subtraction, nothing else in this set off chapter. Set off is the easiest chapter, I believe. If you follow this diagram, you can solve it in a minute. Because this is so simple. Addition, subtraction, you just to recall some exception. That this loss cannot be set off from this and that loss cannot be set off from this. And you will have the answer of your GTI. Exactly. In a 2 or 3 or 4 or 5 minutes. Yes. So Arshal, now you try this horizontal form. Try those questions trying to solve vertically. Solve in this format and it will consume your at least less than 50% of time, and even it will be solved very easily. I suggest and request to all of you, please follow this format. Okay. Chalo, so now the time is for a break. It's already 8:39. So can we go for a break, Mr. Sanket? Okay. welcome back everyone. I believe you must have your coffee, tea, etc. And we were discussing questions for computation of total income and tax liability. And in this question number 6, we have already calculated our gross total income, which is 9 lakh and 5,000. Now, because we have to calculate tax also under default tax regime, so now let me show you. Somebody was asking me yesterday, some student was asked that's how I will apply capital gain tax rates, etc. in a question of computation of total income. And I have told that in today's session, we will discuss that, how to present, how to calculate that tax liability. So again, as I have shown that if you apply the horizontal diagrammatical presentation of set-off, it would be really easy for you to solve this question of set-off. Even for the purpose of calculation of tax, you can follow this horizontal diagram I am going to share with you like this. Like in this question, we have GTI. Tax is going to be calculated on your total income. So on the basis of this GTI, we are not calculating TI yet. On the basis of this GTI, divide your income on the basis of your tax rates, which is going to be applicable in this question. Now in this 9,05,000, you can see there is income of long-term capital gain under section 112. There is other income 3,75,000 salary income, and 5 lakh is for casual income. So on the basis of a special rate of income needs to be bifurcated separately. So we are bifurcating casual income over here, always at last. Then long-term capital gain 112 is here. And then other income. Other income does not mean income from other sources. Other income means those are having slab rate income. That needs to be shown in a consolidated place separately. So these are slab rate income, like salary income. Suppose if there is PGBP also, I am going to show it over here for the purpose of calculation of tax. This diagram is for calculation of tax. In this diagram, take your GTI, divide that GTI into slab rate income, all get together, and those are having special rate. Like suppose in this question is suppose 111A income is also there and 112A is also there. So I will make them over here 111A and 112A. So because special rate income needs to be shown separately, that would be easy for you to solve a question. I'll show you how easy it is now. And the chances of solving it wrong would be minimized. This is a solution under default tax regime, what we are solving. So now if I'll put these income accordingly, this GTI 5 lakh would be the part of this. Why I am not taking TI over here? Why I am taking GTI? Still deduction needs to be given under section 80C to 80U. In this question, there is no deduction, but for optional tax regime, even for deduction case, take GTI over here. Divide the GTI in a special rate of income separately. At the end, it is always casual income. In the first place, it's always your other slab rate income. And then your long-term 112, 112A and 11A is there. So now casual income is this one. Long-term is 35,000. And my other income is 3,70,000. Now, why I have taken GTI, let me tell you a very interesting fact. The deduction under section 80C to 80U, maybe you have remembered it or not, but when the faculty must have taught you, they must have told you that deductions under section 80C-80U, these are only available from this category of income. You cannot claim the deduction from long-term capital gain, 112, 112A, 111A or casual income. Deduction can be claimed only from this category of income. So now suppose a very interesting, suppose, okay, just for the purpose of this question, suppose this is, we need to solve under optional tax regime. This question we are solving under optional tax regime. I am telling you why this calculation of tax is so much important. We have casual income, 5 lakh. We have long-term capital gain, 35,000. And we have salary income, that is 3,70,000. Suppose this is optional tax regime and we have a deduction under section 80C of 80C plus 80D plus 80. Suppose the aggregate of these deductions, these allowable deductions, suppose the aggregate of these deduction is 4,50,000. And you are not following this format. Suppose you are not following this format, you are going to solve this question normally. That means you have taken the salary income 370. Then you have added long-term capital gain 35,000. And then income from other source, casual income 5 lakh. So you have written your GTI 9,05,000. And the question says that you have eligible deduction of 4,50,000. So what you will do? You will reduce deduction 4,50,000 out of this value, and the remaining would be you will consider the TI as 4,55,000. You will say my TI is 4,55,000, and because it's less than 5 lakh, etc., whatever it is, but this is wrong. Why? Because by mistake, you have also allowed deduction out of long-term and casual income. Because deduction can be availed only from this other category of income. So if you solve this question in vertical form, you will take this GTI, you will reduce the deduction. Unintentionally, you also allow deduction from this long-term and other source. Why? Because out of this 450, you can only claim 3,70,000 deduction. Understood? Because deduction is only allowed from other category of income, slab rate of income, not allowed from long-term and casual. But if you follow vertical solution, unintentionally, you will reduce, when you reduce 450 from 9,05,000, you will technically giving deduction to these also. So this would be dangerous. That's why I always say, follow this formula, follow this chart, take your GTI, and when you will deduct deduction over here out of 450, now you know deduction would be available only from this category of income. So this would be nil. So the remaining deduction would be waste. Now you know, because deduction would be only available from this category. So that mistake of extra deduction you still have. You have still having almost 80,000 deduction left out of this 450. You only claimed 370 over here. So you are left with 80,000 more. So in this, if you follow this horizontal form, you will not going to allow this 80,000 from over here, because you know deduction can be claimed only from that part. But in vertically, this mistake can be done. If you avoid that mistake, it's well and good. But in examination pressure, we generally don't remember this thing. We wrongly provide deduction out of these income also when you solve this question vertically. So this is a very important tip for all of you. Because in this example, we are under default tax regime. So there is no deduction allowed. So this income, because there is no deduction, deduction is nil. So this will be after deduction my income, also same. So my GTI would also become my TI because there is no change in it. So my TI still become 9,05,000. And when TI is 9,05,000, now I have to claim now I have to calculate the tax. Because it's less than 12 lakh, my TI is less than 12 lakh. So you can check the rebate also over here. Rebate available? Yes. Up to 60,000 rebate I can claim from the tax because my total income is less than 12 lakh. So first of all, we have to calculate the tax. Then we can see either we can claim the rebate or how much rebate we can claim. Till now, clear? Yes, Amar. Other income means those income is having slab rate of income. Those do not have special rate of tax. The special rate of tax incomes are casual income, 112, 112A and 111A. Only these are having a special rate. Other than all these four income, everything is your other income for the purpose of calculation of tax, whether it's PGVP, house property, salary income, etc. Even short-term capital gain other than 111A would form part of your other income. So short-term cap gain under section 111A is having separate rate. But suppose a building you transfer within 2 years. So that will become a short-term capital gain, but that would be other than 111A. That short-term would form part of your other income. So that I believe you must have gone through under capital gain chapter. Yes, Arun, deduction is only allowable to slab rate income. So you must have gone through a deduction chapter, no? This point has been clearly mentioned over there. The deduction cannot be claimed from casual 112, 112A, 111A. It has been written in your study material also. So Mohit, the 80,000 remaining is lost. It's a loss, dead loss you can say. You cannot claim it anywhere. Lakshmi is saying this tip was very useful. Thank you, sir. You're most welcome. But let me tell you, please follow for set of question and tax calculation this format. It help you to save your time as well as the unintentional mistake also. So even you remember that deduction cannot be claimed from long term, etc. But if you going to follow this format, you unintentionally going to give the deduction in examination pressure. Okay, so move on over here. Harshal is saying, sir, even in vertical format, if take GTI, then less deduction and note given to casual income and long term. Still, yes, it's still right. But will you able to understand or will you able to remember this provision at that time? When you will see GTI 9 lakh, deduction is 5 lakh, we generally provide deduction directly. You do not see from which income we are technically giving the deduction. But if you can remember that, it's well and good, you can go through it. No problem. Chalo. Abhi we did not calculate the tax final. Now the calculation of tax is here. Now we know the rebate can be claimed, etc. Now move on to the calculation of tax. So under default tax regime, we have the basic exemption limit of 4 lakh. Clear? This basic exemption limit will be firstly provided from other category of income. So out of this 3,70,000 basic exemption limit I have used. So out of this 4 lakh, 370 basic exemption limit has been utilized against your salary income, which is our slab rate of income. So the income remaining under salary head would be 0. There is no taxable income. But you still have left with unexhausted basic exemption limit. Out of this 4 lakh, you have just utilized 370. So how much is your basic exemption limit left? The basic exemption limit left is still 30,000. And the good news, you can utilize this basic exemption limit against your long-term capital gain 112. Under section 112, you can utilize this balance basic exemption limit unexhausted. First of all, you have to, this is the order. First of all, you have to give it to other. You cannot transfer this to directly to long-term cap gain. First of all, this is the order. You have to give it to this. Then you can move on to the long-term capital gain. And now you can see this is 35,000. Out of this 30,000 remaining basic exemption limit, I can utilize from long-term capital gain. So the remaining would taxable long-term cap gain would be only 5,000. Again, there is a restriction. Basic exemption limit cannot be utilized from casual income. Suppose this is left with 30,000. Suppose my capital gain is 20,000 only. It's not 35,000. Suppose this is 20,000. And exemption limit is 30. So out of this 20, I can utilize the 20,000 limit and the remaining would be 10,000. This 10,000 cannot transfer to casual income. Casual income is locked. I've told you. Casual income is a locked income. You cannot claim even expenses from it. Under income from other source, you must have gone through that disallowed expenditure. So from casual income, you cannot claim any kind of expenditure, any kind of deduction, any kind of set off, any kind of basic exemption limit. So because we have less exhausted limit is there, so now the taxable long-term cap gain would be 5,000. Suppose the exemption limit is even 50,000 with me. 35 would be utilized, 15,000 would be lost. We cannot take the benefit of that exemption limit from casual income. So now we have taxable income, finally. Out of this total income, 370 has been exempted, so salary income is nothing left to tax. The taxes need to be calculated on this long-term capital gain and on this casual income. On this long-term capital gain, the tax rate would be 12.5%. Clear? So the tax would be 625 rupees. And what is the rate of tax in case of casual income? It's directly 30%. So that would be 1,50,000. So technically, the total tax is 1,50,625. Clear? Now the rebate concept will be there. How much rebate we can claim in this case? Rebate is applicable because my total income is less than 12 lakhs. So rebate provision has been applicable. We have already mentioned that. Now out of this tax, how much rebate I can claim in this question? This is computed capital gain given, Amar Shinde, an exemption of capital gain of 1,25,000 is under section 112A capital gain, 112A, that equity share, etc. And this capital gain is 112. In 112, there is no exemption. Aji, so can we claim rebate against it or not? This is a question. And if yes, how much rebate we can claim? Kambikarjun is saying no. Why no rebate, Kambikarjun? Harshal is saying yes, rebate. The answer is Dhanlakshmi is saying something. After calculating this format, then pull all the details in vertical format, sir. Yes, this format you can utilize for your working note. So you will be able to find out what income would be my total income, what would be my tax liability, and after that you can present in your vertical format the final figures. The tax is nil in case of salary income. On long term, it would be 625. On casual, it would be 150. So it won't take more than 2 or 3 minutes. Presentation is also a matter, of course. Dhanlakshmi is saying rebate is 60K or tax, whichever is lower. Now let me tell you, in this example, there will not be any rebate. The correct answer is no rebate. Why? You have to figure out why I am saying this. What is the reason? This provision, why I am saying there would be no rebate, it has been given in your capital gain topic. In capital gain, you must have gone through with a special rate of tax concept, in which it has been mentioned that against a special rate of income under default tax regime, against a special rate of income, there would not be any rebate. No rebate for a special rate of income. So rebate would be nil. Even this is not nil due to tax because total income is for less than 12 lakhs. So it would be there. But because we are applying a special rate of income, so against the special rate of income tax, you cannot claim the rebate. So this would remain 150,625. Surcharge not applicable because income does not exceed 50 lakh rupees. Now 4% cess you need to apply. And the cess would be 6025. Total is now 1,56650. Still, it's not over yet. This is your total tax liability. Now there is a twist. Because there was casual income, you can see that casual income. And because you earned casual income, and on casual income, there is a concept of TDS. If you earn casual income, the TDS rate is also 30%, which must have been deducted. Must have been deducted. So in the question, it has been assumed that because you earned 5 lakh rupees casual income on which TDS must have been deducted. So you must have paid TDS already of 1,50,000, like advance tax, TDS, TCS. You calculate the tax of this casual income, but out of this tax liability, it has been assumed that TDS must have been deducted on your casual income of 1,50,000 rupees. So the remaining tax liability would be only 6650. And this question was having two requirements: calculate your tax liability and the advance tax concept. And in case of advance tax, because it does not up to 10,000 or more, advance tax applicable when your tax liability is 10,000 or more after TDS, etc. And because it is less than 10,000, 6650, so no advance tax concept is applicable. So two answers. First is your tax liability is this one, and second answer is no advance tax provision as it does not exceed or equal to 10,000 rupees. I hope you understand why I was saying that this question is so much important. You can see now, I have marked it twice. I have marked it twice. So how much important it is. Look, this question, if you try once or twice or thrice, you will understand a lot of provision. Even in this a simple 6 marks question. This question is having multiple things to make you understand how setup needs to be done, how calculation of tax rate chart need to be prepared, and why we are segregating it because of deduction problem. Reduction problem will not arise in case of default tax regime, but it is very important under optional tax regime. So why I need to bifurcate my GTI into separate rates to understand the deductions correctly claimed and also the basic exemption limit. First of all, need to give into other income. Balance need to be transferred to the long term. Then why rebate is not given? Because it's not applicable in case of a special rate of income. Then again, the TDS we have to reduce automatically because we have earned lottery income gross. So in a single question, you will learn a lot of things which will help you to solve other questions. So I am requesting you, please try question number 6 2 or 3 times today. It will give you very, very interesting insights, very, very useful information to solve a question of calculation of tax. This will help you to understand a lot of things in solving these kind of questions. These are small things. You know the provision, but the way you present this question, you will know how to find out whether should I give deduction, what should be the special rate of tax, why rebate is not applicable, how to set off my provision. This is really, really a very useful question for all of you students. Remember this. Okay. Let me see if there is any query. Yes, no rebate applicable if there is special rate of income. So tax payable is 6650 plus. Correct, it is A plus category question A. Under the old tax regime, not allowed only against 112A. Look, under old tax regime, in case of optional tax regime, 112A, against 112A, you cannot claim the rebate, and against even casual income, you cannot claim the rebate. So rebate under old tax regime is allowed under section 111A and 112, not against 112A and casual income. Okay, Arun? Vedant is asking, so for how much marks as it will come? This is the problem. Why I need to think about the marks? Think about the solution process. This question is having 3 or 4 superb calculations. So it could be, if this kind of question would be an examination, I believe that would be at least for 6 marks, not less than that. But this question will taught you a lot of things, which could be a small part of other question also. Okay, sure. Moving on to question number 7. Mr. Rajiv, aged 50 years, a resident individual and a practicing chartered accountant, furnished you the receipt and payments account. So receipt and payment account is there. If there is a trading and profit and loss account, our process to solve the question is net profit we take and then plus minus plus minus plus minus. Even if there income and expenditure given in question, we take the surplus, then we do plus minus plus minus. But if that is a receipt and payment, then we need to prepare a new income and expenditure. And in that case, we only consider allowed income under PGBP and reduce allowed expenditure under PGBP. So that will result my net profit under income tax. So if there's a receipt and payment, then we cannot take any amount and we will not go for plus and minus provision. We will only fetch the information. From receipt side, we will only take those receipts, those fall under PGBP. And from payment side also, we will only consider those payments. Those are relevant for my business expenditure. Okay. Let's see what is the requirement of question. So opening balance of cash, fees, rent, motor car. So rent is there. That means house property income may be there. Staff salary, other office rent, housing loan repaid. So interest, total repayment 188, out of which 88 for interest. So interest would form part of PGBP. Principal amount could be part of 80C deduction. Life insurance premium deduction. Motor car acquired. So depreciation need to be charged. Medical insurance premium 80D. Books depreciation. Computer depreciation. Drawings personal. PPF deduction. Motor car maintenance expenses, closing cash balance irrelevant. He occupy 50% of the building for own residence and let out the balance for residential. Monthly rent of 50. So 2 parts of building is there. One is for self-occupied, one is for let out. Constructed in 1011. Motor car is for both official and personal. 1/5 of the motor car is for personal. So 1/5 is for personal. So for business, we will take only 4/5 of the expenditure. WDV has been given for the purpose of depreciation. Cash system of accounting is following, of course, restricted payment given. That means cash system of accounting. Compute the income of Rajiv. Only total income needs to be calculated, assuming that he has shifted out of the default tax regime. So optional tax regime is there. So let's start it. So we will consider only the income which is relevant for my business. So on the basis of that, suppose first of all we are calculating PGBP. We will take the receipt. This would be my receipt. That is piece 593800. Rent is income from house property. Loan is not a part of the receipt. Then moving on to the P&L part, debit side, expenditure side. Less allowable expenses we need to take. So staff salary, of course, would be part of my expenditure. Administrative expenditure 1148. Office rent This housing loan would not be form part. Life insurance premium would not form part. Motor car acquired in January 26, 425. So we will take the depreciation. 425 less than 180 days because January 26 we acquired. So 7.5%. And because 1/5 is for personal, so we will take the 4/5 of this. So if you calculate, it would be 25500. 25500, the depreciation. Medical insurance, 80D. Books, we can claim the depreciation at the rate of 40%. July may we have purchased it. So depreciation at the rate of 40%, 8,000. Computer on 1st November. So half of the rate, and the half of the rate would be again 20%, less than 180. That would be 6,000. Next is check that has been done. Domestic drawing will not include. Motor car maintenance is 10,000. So that motor car maintenance, 4/5 we will take. That would come 8,000 rupees. What left? 50%, that would be house property, motor car. The depreciation on this, furniture and fitting, and plant and machinery and computer. WDV has been given, so 10% of it, 15% of it, and 40% of it. That will come 6,000, 12,000, and 20,000. After this calculation, your profit would be 2524500. Business income would be 25,24,500. Now for income from house property, you have two properties. One is self-occupied. Now you have two part of property. One is let out. Self-occupied annual value would be nil. Interest deduction you can claim. In the question, it has been mentioned that total interest for that property is 88,000. So we can claim 50% over here. That would result in loss of 44,000. And in case of second property, the rent has been given 60,000. No municipal tax information, 30% deduction, 18,000. And interest, 44,000, 50%. So house property loss would be 2,000 rupees. Aggregate house property loss would be 46,000 rupees, which could be set off from business income. So if we will set off it from business income, my GTI would be, after setting off, 2478500. Out of this, now we can claim deduction. As you have seen that 1,88,000 was paid for housing loan repayment, out of which 88 was interest. So 1 lakh would be your principal payment that you can claim under section 80C. Then for payment for PPF, it is 20,000. Payment for LIC, it was 24,000. This is all 80C we will claim. And payment for 80D, medical insurance premium, how much it was? I guess 18,000. That we can claim over here. So after that, we will arrive at our total income, which would be 2316500. So if you follow the process, if you read the information, apply the provision without being nervous, I believe you will be able to solve this question easily. Look what we are doing. We are just all the information which is given. I believe the provision you already know. When I'm telling you we need to add it back or reduce it. So if you understand why I'm doing this, that means you know the provision. If any one of you is having problem, what this sir is doing, that means you are lacking in provision. So first of all, you have to go and revise the chapter. But if you understand why I am taking depreciation less than 180 days, if you understand why I am allowing this thing, why I am disallowing this thing, that means you know the provision and you understand what I am actually doing. But to solve it like me, you have to practice it more. In the revision class also, I have told you in that 4-night program also, I have discussed with the students that you have multiple questions. You have almost 400 questions you have under income tax. If you consider the test your knowledge questions of all chapters, illustration, then MTP, RTP, case scenario basis, and previous year 3 or 4 attempt questions. If you are able to practice these questions, that would be more than, I guess, believe 350, or it would be maybe up to 400 question you have. So if you practice them, now you must be thinking what sir is saying. 400 questions. How we will practice those questions? So you have to solve those 400 once. And I believe out of those 400, you have already solved all illustration and test to knowledge question from the study material. So we are talking about almost 120 question you have already done, or maybe 150 question would be there. Now you are remaining with 250 question. Out of those 250 question, 30 are case scenario, the MCQ based case scenario booklet. And those 30s all having at least 5 MCQs. So 150 are MCQs. So 150 you have already covered in study material. 150 MCQ you must have been tried, like in revision class. I have solved multiple MCQs with you for chapter basic concept, residential, house property, salary, and PGBP. So we have already covered that also. And if you did not attend that please try to solve that case scenario booklet. So 150 question practice would be from there. And these are MCQ. It won't take you that much time. So how total we have covered? Almost 300. Now you are left with 150 question, which is based on MTP, etc. So please solve them also. And let me tell you, when you solve those questions, as I always asked in the normal LVCs, the revision class, please mark important. Like today we have solved 7 questions till now. Out of those 7, question number 6 was most important. Or maybe 1 or 2 you must be thinking this is also important. So out of this 7, only maybe 2 questions would be there that must have taken attention of you, that okay, this is our important question because it is having this kind of concept. So suppose if out of 7 we are just taking 2 questions as an important, because all other question is having repetitive provisions, this disallowed, this allowed, this disallowed, this allowed. So what is the percentage? It's just less than 30%. So out of those 450 questions, when you will try and you will mark those important questions, believe me, the important question would not be more than 60 or 70. So for the revision, next time revision before your examination, 15 days, 20 days, when you will revise these questions, only try for those 60 questions or 70 which you have marked. And let me tell you, in those 60, 70, 90 or 100 questions, if you take, out of those 100, almost 50 would be from your case scenario MCQs. So the full length question would be not more than 50 anyhow. And you can revise those 50 questions, I believe, in 3 or 4 or 5 days revision. And when you revise a numerical, you know what happened? You're technically revising the provision also. When you revise a numerical, you need to solve a numerical problem. That means you're automatically revising or recalling that provision also. So it is a dual benefit for all of you. So please remember, when you try questions, when you practice questions, do not think I have to try 400 or 450. You are going to filter out of those 450 questions, that will be not more than 100. 100 question if you will try like this, an important question you have done before your examination, I can assure you, you will get very good marks. So strategy also play an important role. This is just not knowledge, knowledge and knowledge. Knowledge is important. How to apply that knowledge smartly, that is all about today's generation. So you can do that. You are the Gen Zs, of course you will do that. So question number 7 was there. Like you need to solve now question number 8 also. So we have already covered question number 7. Now, please try these question 8, 9, 10, 11, 12, 13, 14. 14 question is very interesting. It is having the AMT concept also. Question number 14 is an AMT concept question. And the tax calculation also. So this is again would be a very, very important question. If you try this question, you will understand how to apply the AMT concept in a question. How to find out the AMT credit. So all the AMT problem, the most beneficial case, how actually needs to practically solve, you will understand in this question. So these questions would be really important for your revision part. Abhi, if you have any query, student, you can ask. If you want, I can solve this question number 14 for you in short. Chalo, I'll solve this for you in short. So Mr. X, an individual, set up a unit in a special economic zone in financial year 1920. It is important because this is connected with section 10AA reduction. And 10AA for initial 5 year, it's 100%. And for next 5 year, it would be 50%. So this is connected to next year because 5 year already has been elapsed. 19, 20, 21, 22, etc. So my year would be form part of this year. So that was information was important. It is for production of washing machine. And because 10AA is there, that's why we will apply the AMT concept. Because if there is 10AA, 35AD, and QQB, RRB, etc., then only we apply AMT concept. The unit fulfill all the condition of section 10AA. Look, question is itself is saying to you that I am having 10AA. Please remember me. During the financial year 24-25, he also set up a warehousing facility. Section 35 AD. Again, it explains itself. Tamil Nadu. Fulfill all the condition. Capital expenditure is 75 lakh, including cost of land is 10 lakh. The warehouse become operational with effect from 1st April 25 and expenditure of 75 lakh has been capitalized. And other information has been given in the question. Profit in SEZ is 40 lakh. Export turnover received up to specific date is 80. Domestic sale is 20. 35 AD business profit is 1 crore 5 lakh. Now compute the income including AMT section 15JC liability of Mr. X. Both as per 115 BAC and normal provision. Advise whether he should pay tax under default or normal. So first of all, we will solve it under default tax regime. As you already know, under default tax regime, there is no concept of section 10AA and 35A. So when we will take this SEZ business, the profit of full 40 lakh would be considered because 10AA not applicable. So this will be 40 lakh. Now when we'll move on to section 35 AD specified business. Now specified business is having profit of 1 crore 5 lakh. Now the provision says if you are running a specified business, this is my PGBP head. One PGBP is SEZ business, second is specified business. So if you are running this specified business, if section 35 AD would be there, then you can claim the whole amount of expenditure as 35 AD reduction. Out of this 75, 10 lakh it's for land. So only 65 would be eligible to claim under section 35 AD. But under default tax regime, we cannot apply section 35 AD deduction. So from this 65 lakh, I can only claim the depreciation. So from 1 crore 5 lakh, 10% depreciation of 65 lakh we can claim, that would be 6 lakh 50,000. So my business income from this business would be 98 lakh 50,000. The total business income of both business in aggregate would be my PGBP 1385000. There is no other income, no deduction. This would be my GTI as well as this would be my TI. So I need to calculate tax. And because there is no special rate of income, so we can directly calculate tax. There is no requirement of making that chart. If there is section 112, casual income, 112, etc., then we need to go to that GTI part. So tax would be under default tax regime. That would be 3735000. And remember, surcharge would be applicable because income exceeding 1 crore, 15%, 560250. So that would be 4295250. The cess 4%, 171810. Tax would be 446760. Clear? That would be under default tax regime. If we'll go to find out the tax under normal provision of the Act, first of all, we have to calculate under optional tax regime. For optional tax regime, if you'll calculate the tax for SEZ business, for SEZ, that was 40 lakh of profit. But section 10AA deduction we will claim, and it says 50% of profit ET upon TT. So by applying this formula, our export turnover is 80, total turnover is 100, and 50% of it can be claimed as deduction for the profit we have. So our deduction would be under section 10AA 16 lakh. So profit taxability would be 24 lakh for this SEZ. Then we will move on to section 35AD business. The net profit shows 1 crore 5 lakh. Out of this, now we can claim the full deduction of 65 lakh under section 35AD. So the remaining profit will be 40 lakh. So total aggregate total income 64 lakh. On this 64 lakh, if you will calculate tax after applying 10% surcharge, cess, etc., I am including everything, your tax would be 1980. 1980 would be tax under optional tax regime. Now, because section 10AA and 35AD is there, so AMT also apply. Now we need to calculate the adjusted total income. For that purpose, we need to take the total income under optional tax regime. That was 64 lakh. In this 64 lakh, we have to add back section 10AA deduction, which was 16 lakh. And we have to add back section 35AD deduction, which was 65 lakh. But we can claim the depreciation on it. 6.5 lakh we can claim. After this, my adjusted total income will be 1385000. Now on this income, the AMT tax rate, because ATI exceeding 20 lakhs, so AMT tax of 18.5%, as income exceeding 1 crore, 10% surcharge and 4% cess. Let me correct, 15% surcharge and 4% cess would be applicable, and that would result in the tax of 30,64451. Now you can see, this is my AMT tax, this is my optional tax regime tax. Whichever is higher needs to be taken. So this AMT tax is high. Now it needs to be compared with the default tax regime tax. And default tax regime tax is 44,67,000. This is 30,64,000. Out of these two, we need to select the lower one. So this would be my tax liability 30,64451, which is as per AMT. So AMT tax is lower than default tax regime. So this would be my tax. And what is regarded as my total income? Because AMT tax selected, So its ATI will be regarded as my total income for the purpose of income tax for this year. This would be called as total income, 1,38,50,000. Tax liability would be 306,4451. And there is last thing, AMT credit. How much AMT credit we have? So the tax of AMT less the tax of optional tax regime, which was 198,1980. This one. The difference would be my AMT credit for the future, which I can utilize in next 15 years. This would be AMT credit. So, like this, you have to solve the question of AMT, which is most beneficial tax calculation, and the remaining AMT credit also needs to be found. So, is there any query, student? Please let me know. If there is no query, then let me tell you a story, small story, last story for our session. Then we will see someday to each other. So story is just like that. It's a real story. And last session में भी मैंने बच्चों को बताया था. Maybe this will inspire you. Reality क्या है? एक जो bird होती है eagle. तो eagle की generally एज होती है 30 to 35 years. Whose life is 30-35 years. So जब वो थोड़ा बूढ़ा हो जाता है, like 30 years के आसपास, तो होता क्या है, जो उसके विंग्स होते हैं वो बहुत हैवी हो जाते हैं, उसमें एक्स्ट्रा फेदर आ जाते हैं, तो उसको उड़ने में बहुत प्रॉब्लम होती है। जो उसकी बीक होती है, चोंच होती है, वो टाइम के साथ बैंड होना शुरू हो जाती है। तो जो बैंड हो जाती है काफी, तो उसको किसी भी अपने शिकार को खाने में बहुत दिक्कत होती है, बिकॉज कंप्लीटली धीरे धीरे करके पूरी बैंड हो जाती है। जो उसके नेल्स होते हैं, उसके जो क्लॉज होते हैं, वो भी बैंड होना शुरू हो जाते हैं, तो दैट ईगल कैन नॉट हंट प्रॉपरली। तो धीरे धीरे उसकी फिर डेथ हो जाती है, बिकॉज वो हंट नहीं कर पाता। बट उन ईगल्स में से ना कुछ ईगल्स ऐसे होते हैं जो ऐसा होने पर ना एक माउंटेन पे चले जाते हैं, जो आसपास उन्हें बड़ा सा माउंटेन या रॉक कोई होती है, वहां जाते हैं। एंड व्हाट दे एग्जैक्टली डू, दे स्टार्ट रिमूविंग देयर फेदर। वो अपनी बीक से अपने एक एक फेदर को निकालता है, एंड इट्स अ वेरी पेनफुल प्रोसेस, इट्स नॉट इजी। अपनी बीक को भी वो उस रॉक पर या माउंटेन पर रब करता है, घिसता है, जिससे वो टूट जाती है। लेकिन ये आसान नहीं है, ये बहुत डिफिकल्ट है। इवन अपने जो उसके क्लॉज हैं, जो उसके नेल्स बैंड हो गए हैं, उनको भी घिसता है उस रॉक पर, और धीरे धीरे करके वो नेल्स भी टूटते हैं। बट ये जो प्रोसेस सुनने में इतना आसान है, ये प्रैक्टिकली बहुत डिफिकल्ट है, बहुत ज्यादा। एक्चुअल में ऐसा होता है। एंड जो ईगल ऐसा कर लेता है, तो थोड़े टाइम बाद उसको नए विंग्स मिलते हैं, पुराने फेदर है वो गिरा देता है, तो वो हल्का हो जाता है, ही कैन फ्लाई नाउ अगेन। नई बीक होती है उसके पास, वो जनरेट होती है ऑटोमेटिक, एंड नए नेल्स आ जाते हैं। एंड उसके बाद वो 20-30 ईयर्स और सरवाइव कर पाता है एज अ किंग। तो बात बड़ी सिंपल सी है, जो हर स्टोरी में होती है, जो हर कोटेशन में है, हर थॉट ऑफ द डे में है, हर चीज में है, that अगर कुछ अचीव करना है अच्छा, तो मेहनत तो करनी पड़ेगी। पेन तो होगा, सफरिंग तो होगी, प्रॉब्लम्स तो होंगी, बट जो ये सब कर लेगा, वो किंग बन जाएगा या क्वीन बन जाएगा। तो अगर आप सोचते हैं इजीली चीजें मिल जाएं, तो इतना आसान नहीं होगा लाइफ। तो आपको अगर कुछ अच्छा अचीव करना है, यू वांट टू बी चार्ट अकाउंटेंट, हमें अपनी बीक नहीं तोड़नी, हमें अपने नेल्स नहीं निकालने, वो सब हमारे लिए क्या है, पढ़ना। दैट्स अ वन थिंग ओनली, एंड दैट इज ओनली स्टडी। तो इवन बर्ड्स, एनिमल को इतनी मेहनत करनी पड़ती है, तो हम तो एज अ ह्यूमन बीइंग हमें क्या करना है, सिर्फ पढ़ना है बुक्स, और अच्छी तरह पढ़ना है, थोड़ा और ध्यान से पढ़ना। इफ यू do this thing, this hard work, if you'll do, let me tell you, you will be a chartered accountant very soon. So you remember this thing, that if you will hard work, you will get the result later or sooner, but you will be a chartered accountant. Uh, Arun is saying, sir, I saw a resident status required to use unexhausted basic exam to claim long-term gain. Is this cover 112, 111A and both? Yes, non-resident cannot utilize that exhausted limit, but resident can utilize that. You can try these other question also in your study mat, test your knowledge. You will get all these kind of problems solved, because these kind of problems has been mentioned in some of the question also. Okay. So before closing down the session, I always share a special poem, a very small poem. When I used to study, जब मैं पढ़ता था तो कई बार बहुत डिप्रेशन होता था मेरे को पढ़ाई से, लगता था इसे ये नहीं हो पाएगा, तो इतना डिफिकल्ट है, लगता था पढ़ाई नहीं हो सकती हमसे, कभी खत्म नहीं होगी, क्योंकि बचपन से पढ़ते ही इनसे ये तो डिफिकल्ट भी। तो आई एक्चुअली मेक अ पोएम, एक मैंने छोटी सी पोएम बनाई थी ये उस टाइम की जब मैं सीए कर रहा था, एंड इट गिव्स मी सो मच ऑफ कॉन्फिडेंस and hope that one day I will be a CA. And this is in front of all of you. I want to share with every batch. At the last batch, I always share this thing. So whenever you feel depressed, whenever you feel demotivated, whenever you feel when this examination will over, if you can try, you can recall this poem. And it says, इस दिल की धड़कन कहती है, उम्मीद अभी भी बाकी है, ये रात कभी तो गुजरेगी, वो सुबह कभी तो आएगी, एक दिन ऐसा भी आएगा एग्जाम का टेंशन उड़ जाएगा, एक दिन ऐसा ही आएगा मेरे नाम में सीए जुड़ जाए. So for that one day when you will become a CA, you will be CA Dhanlakshmi, you will be CA Arun Sagar, you will be CA Mehak, you will be CA Mitali, you will be CA whatever you are, you will get this name. And उस दिन ये सारा पेन खत्म हो जाए. इसका इंग्लिश वर्जन भी बनाया था मैंने, जिन बच्चों को हिंदी समझ नहीं आती है, फॉर दोस वी हैव इंग्लिश वर्जन आल्सो. So if you want to understand, you can understand this with this. This is the English version of this poetry. My heartbeat says hope will still remain. This night will pass away and sun will rise again. One day will come when exam fear will go away. That one day will surely come when CA prefix with my name will stay. So once you will be a CA, this name will be prefixed with you for your entire life. And this is the most beautiful feeling when somebody will call you CA so and so. Okay. So if there's any query, students, you can ask, else we are going to close the session. All the best for your studies. Please padhte raho, revise and practice. That's the only way you can have the desired result, whatever you want. Okay, Vedant, you will be also a CA Vedant someday. So please, please just do not skip the discipline. Just be disciplined, be on your path, do not distract, and do not ever believe ये नहीं हो सकता. सब लोग भी कहना नहीं हो सकता. Believe in yourself, ये हो सकता है. I was not a very bright student at my school time, but still if I believe I can do this, any one of you can do this. Okay, तो अपनी स्टोरी कभी और सुनाऊंगा. अभी तो all the best. See you soon someday when you will be a CA. So Vedant ji, क्या sorry, Sanket ji, can we close the session? Yes, it's over. Sanket ji, thank you. Good night. Good day.